Hello, everyone. This is Keith Martin from CAFI. We're just waiting a few more moments for attendees to join, and then we'll start the webinar. Thank you. Hello, everyone. I'm Keith Martin from CAFI. We're just about to start the webinar. We're just going to wait a few more moments. Well, good afternoon, everyone, and welcome to this second CAFI webinar of 2025 on technology trends, including artificial intelligence and its impact on credit protection insurance. My name is Keith Martin, and I am the Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFI. On behalf of myself and the CAFI Board of Directors, we'd like to thank you for joining our webinar today. CAFI is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 14 members include the insurance arms of Canada's major banks and credit unions, along with their insurer partners, which underwrite credit protection insurance and travel insurance. Now, today's webinar is somewhat special. As part of our CAFI strategic plan, we conduct annual independent research with third-party experts, and we publicly release this research and post it on our website. This year's research on technology trends with artificial intelligence and credit protection insurance will be publicly released next week. As a courtesy to our regulatory and policymaker colleagues, we are holding this webinar prior to public release of the research to give regulators and policymakers an advance look at the research results. Now, members of the audience, if you have any questions that you would like to ask the panelists during this webinar, please send them to me as your host using Zoom's Q&A function, and I will pose them on your behalf. Now, we're very fortunate today to have two highly knowledgeable individuals join us. Melissa Carruthers is a partner at Deloitte with extensive experience in technology trends and their impact on insurance, including credit protection insurance. Melissa leads Deloitte's Canadian life and health insurance practice in Canada and focuses on strategic growth and business transformation across the group's benefits, individual life and health, group retirement, and travel sectors. In her current role as a strategy advisor, she works with the leading life and health insurance carriers, TPAs, and brokers to define and execute on various strategic priorities with a particular emphasis on business transformation, distribution model design, M&A, and market entry. She is a fellow of the Society of Actuaries and supports her clients in ensuring sustainable, profitable growth is paired with market differentiation and innovation. Melissa joined Deloitte after working a number of years as a pricing and product development actuary. We're also joined by Mark Lewis, who is a senior manager with over a decade worth of experience in insurance. Mark joined Deloitte after working as an underwriter for a leading global insurer. His primary focus is supporting insurers and distributors in developing corporate and digital strategies that are anchored in data-driven recommendations. Over his career with Deloitte, he has worked with the Canadian big banks, leading carriers, L&H and P&C, as well as provincially mandated insurance institutions. Mark holds an MBA from the Schulich School of Business and a BCom in Finance from the John Molson School of Business. Now, just before we get the webinar underway, I want to extend a special welcome to a number of VIP guest attendees. In addition to many representatives from our CAFI member companies and our associates, which are key supplier companies to the bancassurance sector, we have VIP attendees today from allied industry associations, such as the Canadian Life and Health Insurance Association, or CLHIA, the Travel and Health Insurance Association of Canada, or THIA, and as well, as noted before, from a number of insurance and financial services regulator and policy-making authorities, including the following: the Insurance Council of BC, the Government of BC, the Government of Alberta, the Financial Services Regulatory Authority of Ontario, or FSRA, l'Autorité des marchés financiers, or the AMF, the New Brunswick Financial and Consumer Services Commission, or FCNB, the Financial Consumer Agency of Canada, or FCAC, and the Federal Department of Finance. welcome to you all. Now to get us started, I'm pleased to pass it over to Melissa. Melissa?
Thank you so much, Keith, and thanks again for having us and for the opportunity to partner on this particular research, which I think is very topical and very relevant to many of the global and Canadian insurance organizations. So in terms of our agenda for today's webinar, Mark, if we can move forward to the next slide, I'll provide a quick overview on how we're looking to spend the time. We are going to do a quick recap on the methodology and the approach that was taken to the research. We're going to spend the bulk of the time walking through some of the key insights from our market research on how we're seeing global insurers leverage emerging technologies, where they're prioritizing their investment and the business outcomes they're looking to achieve. We will also be highlighting the specific insights that came out of our credit protection research, which was based on spending time with many of the CAFI members, but also our industry and Deloitte leaders who have spent quite a bit of time within the market to help identify where there are relevant use cases for those technologies that we've explored within the credit protection business model. And then finally, we'll wrap up with some considerations around how those stakeholders within the credit protection industry in Canada can leverage the insights as they move forward on their journey for modernization. And really, it's about a tech-enabled business transformation that the industry is undertaking. We'll leave a couple of minutes at the end for Q&A, as Keith mentioned. And so looking forward to the dialogue and sharing the insights from the research. In terms of a high-level executive summary, I'll touch on some of the key points that we'll dig into deeper throughout the webinar. In terms of the context setting, there has been quite a bit of change happening within the industry, but I think across all industries as a result of macro factors and specifically technology, introduction of new technology and emerging technologies that will impact many of our industries. As a result of that, CAFI was keen to understand what the implication and importantly the opportunities would be for their CAFI members and engaged Deloitte about 6 months ago to undertake the research effort. We identified as a part of our research 8 key emerging technologies that we believe are most likely to impact the future of insurance as well as CPI. We'll get into what those 8 technologies are on the subsequent slides. Our survey revealed and the research revealed that the technology in the next 3 to 5 years that will be prioritized for CPI organizations will be those of client-facing digital experiences for distributors, and that the distributors of CPI have the most ambition when it comes to reimagining the experiences that they will be introducing to their clients, their employees, and to their agents. On the CPI side for underwriters, most of the appetite and prioritization was around making investments in emerging technologies that will improve back office operational efficiencies across servicing and claims was identified as the most critical areas. Some of the challenges that were common themes found throughout our research specific to CPI in their ability to advance their capabilities in technology solutions is related to legacy systems and infrastructure, and then a dependency on or prioritization of broader bank initiatives that would prevent some of the investments being allocated towards emerging technologies within their CPI portfolio. When it comes to future opportunities, most of our research around where we've seen success globally by other insurers that would be most relevant for credit protection. There was 4 key areas of where we see business benefit. One is reimagining the customer and the employee experience. The second is in modernizing their products and underlying platforms. Third, in transforming operations and streamlining engagement models with end customers and partners. And then finally, looking to accelerate some of these capabilities and maturing the capabilities through ecosystem partnerships. So I'll dig into a bit more of the research in more detail and bring some of these cases to life as we move forward. Quickly on the methodology and the outcomes that we set out. Um, the main outcome for the research report is to highlight how emerging technology and Gen AI were impacting the credit protection industry. We are gathering insights and lessons learned from global insurers, understanding how those can be applied to credit protection, and then identifying some of the priorities and strategic investment areas that the CAFI members and those within the the CPI ecosystem have already made to date, and therefore their current maturity relative to where they're aspiring to be in the next 5 years. And then ultimately, this is coming into this consolidated report. There is a longer written Word and PDF document that will go alongside the presentation. In terms of the methodology that was undertaken, we engaged a number of global Deloitte subject matter experts across the insurance landscape, both within life and health as well as P&C insurance, where we've seen a greater maturity as it relates to emerging technology. We spent quite a bit of time with the CAFI members themselves, both business, technology, and operational leaders, to understand their current business priorities, the role of emerging technologies in achieving those business priorities. And then we conducted a quantitative survey that also went out to the CAFI members so that we could do more of a data-driven assessment of where investment is being prioritized in certain technologies, and the value that they believe that they can realize by making continued investments. We supplemented this with some external research of our own at Deloitte, seeing where global insurers have made their investments in the actual real business outcomes that they've realized. And so far, we've been socializing this material and gathering some feedback from the main research committee at CAFI. All right, so to start off, we wanted to touch on some of the key research insights from our secondary research. So this is really looking at what are the biggest factors that will influence the future of insurance globally that will inevitably end up driving investments within technology. The first one is just the greater number of and opportunity for emerging technologies available within the Canadian market specifically. We're seeing advancement in both the sophistication of emerging technologies, but I think accessibility and the affordability of accessing those new technologies, which presents greater and greater opportunity for insurance organizations to adopt. Evolving customer preferences really is at the forefront of why insurers are making a number of these investments, as consumers have a greater expectation of engaging through more omni-channel experiences, which means they can engage in the channel of their choice and move seamlessly between the different types of channels, whether that's digital, web, mobile, contact center, and in person. Increasing competitive landscape, we've seen many, not just insurers, but financial organizations, health organizations expand where they play within the insurance ecosystem. And so non-traditional players that are coming into the market to address friction points left unaddressed by incumbents presents a greater challenge for those that are slow to make the corresponding investments in their own capabilities. Our macroeconomic environment is putting pressure in many instances on profitability, as is any left inefficiencies from a lack of investment in supporting technology and enhancements in automating processes. And then finally, an evolving regulatory environment, keeping pace with some of the changes that we're seeing come through specific to insurance does, in many respects, drive a need for better data capabilities, reporting capabilities to help ensure that sufficient oversight is in place. So those are some of the highest level external forces that will be driving change and will present greater need to invest in technology. As we get into the specifics on the technologies, there was 8 technologies that we considered throughout the research, from data and advanced analytics, Gen AI, cloud computing, cyber and security, CRM and client management assets, modern core platforms, mobile and digital assets, and then process automation. Throughout the research for each one of these 8 categories, we explored how these capabilities are being used within the insurance industry, and then 2, the current maturity of the CAFI members and those within the CPI industry relative to where they would like to be across each of these 8. We can move forward. Thank you. I think an important aspect of understanding, it's one thing to see that there's 8 different technologies that are most prominent, that are going to be available to each of the insurers. It's more about how they're applying it. And so in our research, we found there's 4 key areas where we see insurers making investments in emerging technologies. The 4 key areas are around reimagining the customer and the employee experience. This is either introducing more personalized experience, digital assets, greater functionality within mobile or web channels. The second is modernizing products and platforms. And so we've seen a significant degree of investment going into modernizing core policy administration, billing, and claim systems than we ever have in the past, especially within CPI and individual insurance, which historically has been largely legacy. The third is transforming operations and streamlining engagement models. And so this is really at the heart of it, is looking for opportunities to simplify your operating model and your business model such that you can drive automation across front office and back office processes. This is also an opportunity to rethink how your insurers are engaging with their clients. And so looking at using some of these new digital tools to have more proactive, ongoing engagement with their end customers beyond the point of sale. And then finally, a high degree of focus on ecosystem partnerships as a means to enable or accelerate access to some of these new digital capabilities, which in itself requires a high degree of change management and vendor management capabilities internally. I think this slide does a nice job of summarizing how to achieve some of these business priorities. Each of those 8 emerging technologies can be, which ones are being used to support those different initiatives. And so as you can see, a number of these technology capabilities do expand beyond more than one particular business priority area, and in many cases are required across all, such as data and advanced analytics, cyber, and security. And so you'll see that come through quite a bit in terms of some of the research themes and where many of the CAFI members are making foundational investments. Okay. The next few slides summarize, one, where the industry is making some investment relative to each of the 8 technologies, and then secondly, where the CPI industry is in terms of current maturity and desired future maturity. So advanced analytics is probably the most common and prominent theme that comes out when looking at the data strategies and the priorities of investment for any global insurer. Most of the life and health insurers trail P&C insurers in making the right foundational data investments. And this tends to be the highest priority area, especially for those within the CPI industry. From the research and our interviews with CAFI members, all of them identified data and analytics as the largest short-term opportunity to unlock customer and partner value. There's a ton of data available that currently is not being applied in a way that helps to personalize experiences. And so that to me is one of the biggest opportunities that CPI organizations have, is ensuring that they have the right data foundations. They're thinking differently about how they apply the business insights and build up their internal analytics capabilities. Gen AI, while we've seen a ton of emphasis around this being a game changer for many industries, including insurance, this is the area where the industry, both globally in insurance as well as CPI, has the lowest maturity, but the greatest appetite to actually invest and drive change within the organizations. So this is an area that I think most organizations are still in the process of really developing their governance frameworks, understanding where they would like to start on their Gen AI journey. And I think this is an opportunity for many of the distributors of CPI to leverage some of the investments that they are making at the enterprise level of some of the banks to help accelerate their maturity within CPI. When it comes to cloud computing, I think cloud and cyber go hand in hand. There is a shift to cloud for many of the organizations. Insurers are still on their journey for making their move to the cloud. But what goes hand in hand with that is a greater need for additional cyber and security, because it does introduce additional risks. This was, interestingly enough, on the cyber and security front, where most CPI organizations felt like they were the most mature, and perhaps not surprising given that they are large financial institutions, which are highly regulated. And it does feel like this is an area that most of the CPI organizations continue to plan for future investments. There was less of an appetite in accelerating investments in cloud. What we heard from many of the distributors within CPI is that one of their top priorities is to better understand the needs of their client and who their client is. Historically, insurance has always been an industry that is highly intermediated and continues to be so. So advisors generally own the relationships and own the understanding of the needs of customers. Insurers globally have really doubled down on the need for better client management tools. And so that trend has followed suit within CPI. Unfortunately, there's been limited investments in advanced CRM capabilities across the CAFI members, but that is one of the biggest opportunities that they see, and one of the short-term investments that most CAFI members identified as looking to deliver in the next 1 to 2 years. One of the biggest challenges that I referred to earlier was legacy technology preventing many of the CAFI members from accelerating their maturity, bringing new products to market. It's challenged a bit of the cost to support and maintain their existing infrastructure. And many are debating if now is the right time to re-platform, given the rise of the number of the technology providers emerging within the Canadian market. And so modern platforms is for 50% of the members, I would say, in the top 3 priorities to explore. Very few have already gone through a re-platform of their current policy administration, billing, or claims system, but it is definitely top of mind and seen as the greatest opportunity for driving cost containment. I'll touch on our last slide on the last 2 technologies before getting deeper into some of the CAFI specific insights. On mobile and digital assets, this is something that we've seen significant investment in, especially for the insurers that have employer or group business, whether that's group benefits or group retirement, where the engagement is much higher with the end client in a servicing and claims experience. We're starting to see a greater appetite for mobile and digital assets as a means of engaging directly with clients as well as with agents and advisors. And so the same is true within CPI. This is where I would see greater investment in the short term for many of our CPI stakeholders as they look for opportunities to ensure that their lending clients have access to protection even beyond the point of sale. And so I think this will help make it much more of a seamless, educated experience when introduced through more channels. And then finally, process automation. And so this comes back to one of the biggest opportunities being around simplifying your operating model and your business model such that you can support new business, service, and back office claims automation. In the event that organizations are not willing to make what will be a substantial investment in modern core platforms, automating the processes that surround those core systems will be the second lever that most organizations will be looking to. And so that came through quite clear within our research with most of the underwriters of CPI midway through making significant investments in end-to-end process automation. So with that being kind of the external landscape, what we're seeing globally, what's most relevant and the maturity for CPI, I'll hand it over to Mark to go into a little bit more detail on the specific opportunities for CPI stakeholders to leverage the emerging technologies and the use cases that are really top of mind for the CAFI members.
Thank you, Melissa. So as Melissa mentioned, to supplement our research, we engaged with CAFI members. We did that in two ways. We first had some qualitative, in-depth interviews, both with tech and business owners related to CPI. And we then had a more quantitative survey to get into some of the specifics on investments and priorities across these technologies. Now, on this page here, we look to summarize some of the themes that came out of the engagement with the different CAFI members. When we look at the left at the strategic priorities here, the big theme is really building on what we already have. So being able to move a retention from a reactive function to really a proactive function that can help support current customers and maintaining the right products at the right value and having the service and experience they need to stick with you if you already have them. The next piece here on digital discovery is moving beyond and being able to create that engaging digital experience that you typically would find with historical agents or within branches, but being able to move that to digital channels to be able to have that engaging experience when and where clients are. That would then lead to improved penetration. The lending experience has moved or digitized faster than CPI. So being able to merge the experiences and have them at the symbol of digitization would help on the improvements on penetration, doing all that at a cost and a scale that is possible through technology by streamlining operations. If we then look at the current immediate tech priorities, that really touches on, as Melissa mentioned, meeting customer preferences. There's experiences from non-financial services, as well as even in the lending space, that CPI is looking to catch up to. So using the analytics we have and building value on the data we already have to be able to service customers in the way they want, then being able to be modular and flexible. Clients expect personalization, even if it's not fully personalized. Being able to have different sets of coverages and different options for customers goes a long way to both retention and penetration. Already spoke on the digital engagement channels, but all of this is really enabled given the intermediation and nature of CPI by having simplified integrations, being able to share data on the customer and be able to immediately or directly integrate within the underwriting platforms or the policy platform to make changes really enables these new experiences. If we look a bit further out ahead, there's where we started to see the need for some of the foundational changes on product. CPI products have essentially stayed the same for a long, long time now. So looking at what is the value derived by customers and what are new sources of value that could be brought in through a differentiated, maybe flexible modular product that touches on a few of the aspects of wellness. You're also started seeing AI being brought in. Melissa spoke how currently it is lagging in the industry, and even though there's not a desire to be the leading AI organization in the world, there is a view that these tools, especially internal at first, can enable both the experiences as well as the improved streamlined operations, which touches on the personalized engagement, and then automated underwriting and claims. Underwriting and claims seen as a priority, but given some of the complexity and initial data there, was seen as something not immediate, but coming as short follow, given the large scale or size of this opportunity. In terms of the key challenges, and I'll go quickly here because we go a bit more in depth later on, but some of the main one, when you think about regulation, there are a lot of these new technologies, AI maybe being first that comes to mind, that technologies are moving at a different pace and making sure that with the sensitivity of the information that you control from a CPI perspective, you're following regulations as well as you're meeting experiences and expectations from the customers. Legacy platforms, again, Melissa touched on it, but a large investment required to be able to modernize and transition. Now, there are ways to accelerate that, whether it's through cloud or ecosystem partnerships, but one of the major investment sources requirements is on modernizing that core platform before being able to build the new digital capabilities, which would match the lending model, which has moved faster. Lastly, cost of capital is rising. There's a lot of competing demands for investments. So looking at what are other areas within the enterprises, for example, for the distributors of the banks, where you can tag along and join forces. There is a lot of competition for high quality talent as well as funding available. In terms of the chart here, we look to map where the different CAFI members were focusing their investments over the coming years across the 8 technologies. So you can see a row for each of the technologies Melissa talked through, and then from left to right, you see the high level CPI value chain or journey for the customers there. Now, a few of the key takeaways: advanced analytics is dark blue across the board. Advanced analytics being one of the main opportunity areas. Building on the data you have can create value from end to end, from discovery all the way through to renewals there. So critical there. There's also, when you look at cyber security, consistent across the board as a core requirement for investment future. Now, when you look at some of the other takeaways, there is a large amount of, if we look focused on the right-hand side here, so the back-end operations and being able to automate the high volume transactions and engagements with customers there, versus on the left-hand side, when we start getting into more of the discovery and sales, is a bit more nuanced in how the different CAFI members would be approaching sales and customer engagement, which leads to some more of a varied investment pattern across the different members. On the page here, I'll go through the charts one by one here, some difference in how to read. The chart on the left looks at, based on the survey, what percentage of the CAFI members perceive themselves as currently lagging the industry in terms of maturity for that specific technology. And on the right-hand side, when thinking about the future, which percentage of CAFI members see themselves as being market leading in the future. So for example, if we look at mobile and digital assets, that's where there's the largest jump, and 60% of current CAFI members surveyed saw themselves as lagging the industry, but 1/3 of the industry wanted to be leading in the future, meaning a large gap from going from lagging to future leading. Now, others were, because a bit more interesting, as when you think about Gen AI, where even though there's no desire to be market leading, given where the industry is today, shows that there is still significant investment that would be directed towards bringing in AI tools within CPI, whether it's internal experiences for employees and agents or external experiences there. Yeah, there's significant investment, even though you're not looking to be market leading in the future. Across some of the other ones, cybersecurity, interesting as well, given that's where most organizations or members surveyed saw themselves as wanting to be leading in the future. A lot of those investments also shared by some of the larger banks or other financial service organizations within the ecosystem. On the right-hand side, we look at the largest challenges to being able to invest in these technologies. The number one that came up is about legacy systems. Legacy systems currently limiting the ability to integrate in a cost-effective way new technologies. So understanding what investments or what major investments are required that are foundational that then enable the flexible, agile, modular, or data-informed experiences. Others here I think are important is dependency on other major investment programs. You're obviously not alone looking to invest in these different technologies, and there are multiple demands. So seeing how can you work alongside other demands in the organization, how can technologies be leveraged for more than one purpose, key source or key enabler at that level. So those are the major takeaways on this page here. We'll dive a bit more into investments, challenges for investments later on. Now, bringing it back to the 4 opportunity areas Melissa reviewed, if we break it down by what are the opportunities for underwriters versus distributors, when we think about reimagining the customer employee experience, from an underwriter perspective, their priorities were really on how can they enable the distributors in a better way. So what are the white label tools they can provide? How can they improve data sharing capabilities so that on the distributor side, those digital tools that are engaging directly with customers have that personalized experience, provide frontline employees with the right information at the right time so they can provide that valued service we intended to do. That also comes with investments in CRM and client management capabilities to be able to know your customers in the first place, which then enables the employees on the front line. From a modernizing products and platforms perspective, both underwriters and distributors, the focus here is really on how do we reduce technology debt? What are the core foundational investments that are needed to do today that will enable you to continue to be flexible, agile over the coming 5-10 years? Next, when you think about transforming operations and streamlining engagement, here obviously it'll vary based on where there's the largest volume. From an underwriter perspective, looking at claims and servicing, how can they automate all of the simple claims? How can you automate all of the straightforward transactions, move that to self-serve channels, which is not only more cost effective, but also improving customer experience. And there's also fraud detection, which came up, of how can that be automated? Currently costly, able to use some different AI tools to improve fraud detection and support appropriate use of the funds there. Now, from a distributor perspective, it's on the intake. How can you accelerate or automate even intake, allowing individuals for whom you already have information to have immediate quotes, real-time partner integrations, and being able to accelerate and not have any impact on the potential lending journey that is connected to. Now on the last one, the partnerships and ecosystem piece, really looking at what are new and differentiated options that underwriters can provide by integrating capabilities from these different fintechs or other partners in the ecosystem. While on the distributor side, it comes back again to CRM, but then maybe more innovative bit is where can you find new customers? Customers aren't necessarily on these same traditional channels. So how can you be present within these alternative channels where customers might be interested in learning or engaging with lending or credit protection? I think about the path forward. On the left-hand side here, we'll talk about some of the challenges. We've already spoke a lot about legacy platforms, but a big takeaway here is that there is significant investment required to be able to overcome those that technology debt and legacy platforms that exist today. Now, there's also, although there's large investment, there's a lot of competing or asks on both the investments as well as the high quality capabilities and resources that can allow you to overcome these legacy platforms challenges. Now, from a regulatory perspective, there's two elements here. There's both the provincial regulation while you're looking to provide these products at a national scale, which has some differences, but also the different pace at which technologies are evolving and customer preferences are evolving, while regulatory requirements are making sure they understand it right, which is appropriate given the information held for credit protection. Now, there is a need for evolution. The path forward on the evolution of the product is not necessarily clear. There's different perspectives there, but understanding what value our customers getting today out of CPI and what value do we want to provide for them in the future is a path that different CAFI members are looking at differently based on their unique value proposition and intermediate partners. Now, in terms of key risks, a lot of these, the main risk that came up over and over is on data. Understanding the data we have, we hear about different security breaches and cyber breaches all the time, and making sure that when applying advanced technologies such as Gen AI, we're doing it in a safe way that is improving the experience while not sacrificing any of the commitments and value we have to customers when using their data, which could have major impacts from a client perception perspective if data is seen to be used in a negative way or not being protected adequately. The last one here, economic risks, given additional issues and concerns nationally about affordability, home prices, there are additional concerns from customers on how can they cut costs, which CPI, if not being able to show the value it provides, may be cut by customers. And then also the rising home prices, which is making it harder and harder to find appropriate limits for insurance from an underwriter perspective. I'll say here on some of the mitigation strategies here, the main one is really making sure that data governance before applying these technologies is strong and understood, not taking the approach as a Facebook of moving fast and breaking things, making sure that before investments are done, appropriate data governance is understood. When thinking about AI, what are the guardrails and sandboxes that can be applied to test small and understand the impacts and how the technology will act on safe data before moving it out, both internally to employees or externally to customers. Partnerships can be a way to accelerate. There are organizations here that specialize in all of these different technologies and that their core focus is on engaging customers differently. So understanding how can we attain capabilities that are not currently on hand through partnerships. At the core of customer expectations and also being able to have streamlined operations is being able to be modular and flexible in our offering. So understanding how can we provide the unique value that each customer needs, as well as the unique value that each of the different intermediaries or partners require from our organization. And lastly, innovating with partners. It's a lot more fun to go at it with someone else, but also reduces risk and ensures a bit more buy-in when thinking about innovating as a group, especially given the nature of the industry. That wraps up the main body of our presentations. I'd just like to open up to questions for the next 10-15 minutes.
Mark and Melissa, I might start off the questions by asking about artificial intelligence. I know it's something that you have spoken about, but I was hoping to ask you to just dig in a little bit more. Some organizations are being told that it is going to be fundamentally transformative. But there's also quite a bit of media suggesting that there hasn't been much return on the investment so far. So I was just wondering where you both feel in terms of that spectrum and how it will unfold over the next few years.
I think it's a little bit early to tell, Keith, on Gen AI. I just don't think that we've seen the scalability of some of the solutions to really drive some of the benefits to the extent to which people are talking about it being transformative. However, I have seen many of our clients within the insurance industry in Canada, when focused on very specific use cases and applications of Gen AI combined with AI, because to me, it's not just one in isolation, it's the combination likely that is going to result in the right value delivered. When focused on a particular use case, they have seen the benefits. And so to me, this is more about building up the capability, the confidence, and then scaling the solution before we'll see it being transformative. But I do believe that there's a really great opportunity for insurers to leverage some of the new technologies and test and learn in the early days and get more comfortable in building out the capability. Personally, I feel like it does present an opportunity to be quite transformative. Mark, let me know if you have anything to add or feel differently.
No, definitely align. Maybe one point to add. I have found it interesting over time. We saw when AI and Gen AI was having more of an early buzz, you saw a lot of varied investments in different areas where organizations wanted to get familiar and try different things. A lot of those investments, to most of the point, were not necessarily focused on a specific area and haven't panned out in the value you'd hope to see. Now, in the cases where it has been successful, I think is where there were very specific and targeted use cases that could deliver a lot more value through a specificity. And then the other pieces, you're starting to see also a lot more in the partnership space, given there are organizations that have that as their core focus. It's great to be able to go to an expert in those fields and understanding how their solutions can support your tools. It's not necessarily always required to build it yourself.
Excellent. I just want to remind attendees that if they're interested in asking a question, please send it through the Q&A function and I'll ask it on your behalf. Before I ask another question, Mark, perhaps I could suggest that you close the presentation so that we can see you and Melissa in larger screen. Thank you. And my next question is about a presentation I heard you made about 3 years ago, Melissa, where you indicated that Canadian insurance was a little bit behind in terms of investments in leading technologies relative to the United States, United Kingdom, and I think you mentioned another jurisdiction, Singapore, as all being quite advanced in that area, and that Canada had a bit of catch up to do. Could the two of you just let me know if you think that's still the case, or has Canada narrowed that gap a little bit?
I think it's still the case, Keith. It varies by technology, potentially, but I would say that Canada still does tend to be more of a follower in terms of transformative change in leveraging emerging technologies in insurance. Asia tends to be the most advanced. We're seeing US play catch up to where the UK was. And so I've seen quite a bit of innovation within the US across each of the technologies. And you'll see those use cases throughout our presentation, as well as the research report that you'll be distributing. But I think Canada still has a ways to go in a number of different factors contributing to that. But I still think that we have a ways to go in terms of our ability to really meet consumers where they're at and their expectations of how they want to engage and even from an educational standpoint of understanding the value delivered from some of our products and services within insurance.
All right, thank you, Melissa. And I actually have a follow-up on this issue from a member of the audience, which is what kind of technologies are the UK, US, and other jurisdictions in Asia investing in that give them this advantage? And in particular, where are they prioritizing tech spend as opposed to what's happening in Canada?
So generally, I see the most investment in digital experiences and client management systems. So investments in CRM, better understanding of their customer, data and analytics. So they're much more data driven around how they develop new products, the way that they invest in digital marketing and lead generation, both for third party advisors and agents as well as internal. And then I think specifically within Asia, where they have a different sales and distribution model, one in which is they sell through digital channels. So whether that's mobile apps, other third-party app alternative distribution, that's digital first, as well as advisors. And so they've made significant investments in advisor tools, in providing advisor insights, making sure that they are equipping their employees and agents with the right insights to make appropriate recommendations. So I'd say those are the two main ones, but then those that are really coming to market differently are in the P&C market, where they have already replaced legacy systems with modern policy administration, billing, and claim systems. And so that provides them with better infrastructure to support data, more structured data that they can then use and apply towards some of the digital and more user-friendly experiences. So I think there's a couple of different areas, but those to me would be the top. Mark, let me know if you have anything to add.
Not specifically. I think one point maybe to reinforce is when you mentioned the education, it's one thing they're more advanced from a tech perspective, but there's also an increased habit and use from customers in these geographies. And Asia, for example, will pick on the like using WeChat for just about everything, integration of those channels. I don't know that in Canada you can necessarily jump directly to that. There are some customer engagement differences that still need to be taken into account.
All right, thank you. Another question that has been advanced is around cybersecurity. Again, I know you touched on this, but insurance and financial service sector are so data-driven and so fundamental to our economy in terms of being sort of a requirement for economic activity to work, that the risks from hackers and cyber breaches is enormously risky, not just for these institutions, but for society. Can you comment on that risk? I mean, we read every day about hackers penetrating big systems, about ransomware, about systems coming down. Obviously, this is a major concern, and if you could just comment a little bit more on that, I think our CAFI members and regulators would be very interested in hearing your thoughts.
Honestly, Keith, I don't think there's any more to expand on beyond what you even shared. This is, I would say, top priority for many insurers in ensuring that they have the appropriate security, privacy investments in place, and tends to be what Canadian insurers are the most mature at, right? And that came through very clearly in the survey that we did to all of the CAFI members, that this is the capability that they found they've made the most investment in. And in some instances, I find that that's the priority first before actually making investments in some of the capabilities that are going to drive business benefit. So I think this is probably an audience that really understands and assesses the risks first before making other investments in new capabilities, new products, et cetera.
Another question, Melissa, has to do with your knowledge, yourself personally and at Deloitte, of the regulatory and technology trends in other jurisdictions. And the question is, what are regulators from the perspective of these new technologies focused on in terms of oversight?
I would have to go to some of our colleagues. We engaged a number of SMEs throughout our research from a regulatory perspective, and so I would defer to them. Happy to connect any of the members or those in the audience that have questions for them with the appropriate stakeholders at Deloitte.
All right, excellent. Well, we're nearly done the webinar. I might end by just asking you and Mark if you have any final comments and insights in terms of some of these issues before we close it off.
Yeah, I think one of the biggest takeaways for me was that we continue to be slower than I think we as an industry would all like in terms of transforming and rethinking the way that we do business and showing up differently for our clients. And so I think we're at a great space now with the number of technology solutions and assets available to us that the only thing preventing us from moving forward is really ambition and the appetite to make some of that change, as well as the investment required to do so. And so I think being really thoughtful around where you prioritize some of those investments in a way that you think will have the greatest ROI to an impact on achieving your business ambition is probably our biggest takeaway and the best advice, just based on some of the learnings we've seen globally. And so there really is an opportunity to change the way that we're doing things. It doesn't need to be transformative. It can be incremental. But ideally it's done very thoughtfully and in alignment with your business strategy. Investing in technology for the sake of investing in technology is not going to deliver the results or have the transformative impact that we would be looking for. Mark?
As again, everything Melissa said there. I mean, the industry hasn't changed drastically in a while for a lot of reasons we already went through. And I think it's an interesting opportunity to quote unquote leapfrog in a way by having seen use cases, seen what others have done. But again, coming down to the strategy of what's your unique value proposition to your customers and partners, and understanding how can technology play a role in that. So exciting times ahead for CPI for sure.
All right,
Thank you so
excellent.
much, Keith, and to CAFI for the partnership and engaging us on this research report. Very interesting, and hopefully it provides some value to many of your stakeholders within the industry.
And just before we close it off, thank you for that, Melissa. I just want to remind those who are attendees, including regulators and policymakers, that as a courtesy, we provided a sort of advanced view before public release of this research. But early next week, we will be publishing the PowerPoint that Melissa and Mark presented on our website. We'll be issuing a press release. I want to emphasize for our French-speaking colleagues that we have translated all of those documents, and they'll also be available at the same time early next week on the French side of the CAFI.com website. And we are hoping to get a little bit of trade media pickup so that there can be a little bit of coverage of some of these very important trends. It's been, as always, Melissa and Mark, a great privilege for CAFI to partner with Deloitte. We've really enjoyed the partnership, and I just want to sincerely thank you both for your excellent insights and expertise. And I now declare this webinar over. I want to thank all of you who've attended for your participation, and I wish everyone a great rest of your day. Thanks again, Melissa and Mark.
Thank you. Bye.
Bye-bye.